Good evening all. Ira Epstein of Linn Associates with your financial market wrap-up. And this is for Thursday, and we are now on June 18th, 2020, about 5:35 in the afternoon. You know, today felt like a summer day. The markets really weren't moving very dramatic. A lot of things happened. I use window envelopes in my subscriber videos. And window envelopes are a deviation from a key moving average. And you're looking to see if the market gets certain numbers, is it running out of steam to the upside or downside? That's the theory. That's how I teach it. That's what it is. They normally stay in single digits. Well, when we had all this wildness over the past 2 months, many of them, and I mean many, it could be in JETS, the ETF, it was a number of futures, they got into double digits. They're not anymore. They're all caving in. That's often goes with the sign that volatility is shrinking in the marketplace. So I thought I'd share that with you, but it's something that I was noticing. Tonight, we're up in all the stock indices, the gold market down a fraction with the silver. Foreign currency markets are sort of drifting. We've been in a corrective mode in there where the dollar's been rallying and the euro's been falling. On the energy markets, these are still very good prices. If I'm a producer, I'm quiet, I'm saying nothing. I got my wells on, and I'm hedging $40 crude oil for all purposes. I don't think that a number of them lose at $40. And I'm not saying everybody can make money doing that in the production area, but I think those that are well capitalized, this is their ball game. When we look at the S&P, I'm going to repeat what I've been saying. If we look from this break low, and this is a close-only chart, we have not had one pattern where we've had a correction on a close, made new highs, and broken the pattern where we started rolling to the downside. Now, this is this week so far. This was last week. So last week, the market closed down 152 at 3034.75. So far, we have one more day left on the week. We're up 82 points. You'd have to get through a whole nother week. Let's assume you close in this area. And then if you closed under that, it could be a warning sign that maybe the market has finally run out of steam on this rally. I am not looking for a top, but my job here is to point out different things to you. When I take a look at the chart action, it is just narrowed in. I mentioned yesterday, and I'm going to say it again, it appears we've got a trade top, a trade bottom, and we've gone to the center of it, and we're just sort of sitting at this point. When I take a look at the swing lines, they turned into a downtrend. I don't think you'd argue we have lower highs and we have lower lows. That's from this low to that one. That's bearish. What breaks the trend? Taking out 31.56 1/4. Take that out, you could end up with the pattern. In fact, you would end up with a pattern of higher lows and a higher high. That would be bullish. Where's the 18-day average of closes? Remember what I tell you. Often, the markets go back to an 18-day average of closes to fight battles. You were way down, you came up, you fought a battle. You went way up, you fell back here, fought a battle. You were way up at a new high, fell back, now you're just fighting with the battle right here. That's very typical. Where's the Bollinger Bands? They're coming down slightly, not very much. Why do I bring them up? Because 95% of the time the market will trade within this algorithm, which tells me I've got resistance and support points in them. So, going home, last night, Thursday, this is the reopen of the market for Friday. Going home Thursday night, the swing line's down, but the bias is up. Why is the bias up? Because the price settled over the 18-day average. Simplicity for you, when the market's over the 18-day average, my definition of bias is up. Under it, my bias definition is down. Next, I go to where momentum is. What would you call that momentum? Sideways. Sideways market right now. We'll see what it develops into. The NASDAQ is not the same. The NASDAQ has been bullish. It's kept a pattern of higher lows, higher highs. As it's attacked this 18-day average, it has managed to stay over it on a closing basis, but it is very overbought. Resistance is back up here at 10,152.80, so I'd be watching that very closely. This is the powerhouse of the stock indices. It hasn't lost that. It's tech sector. The Dow is in no man's land. You've got a pattern of a lower low, a higher high, stuck at the 18-day average. In fact, it's practically hitting it every single day for the past week and a quarter or so. And momentum is flat in this market. The Russell turned bearish going home. First time I've said that. Lower high, lower low. I think the pros are selling this market at 1433.60. I think they're wrong, and I think they'll think they're wrong if you make a higher high on the move. I can't prove that that's what they'll think, but it's my guess. But I also see that as a resistance zone of the 200-day average. So I'm not convinced they jump on board and say, oh, let's get bullish now. But I do think their bias is to the downside. The trend is down. Momentum is flat, very similar to what we saw in the other indices. In the VIX, we're still in an uptrend. We have the pattern of higher lows. I think you'd see that. But what do we also have? Lower highs. The legacy has been the higher high, lower low. But with today's action, it's a warning sign. If the market gets under this low, and that low of that day was specifically 2870, you break the uptrend pattern. Now, if you break the uptrend pattern, you always look to see what the VIX is doing because it might give you an idea. The inverse often happens in the stock market. But when everything's real thin and just moving slightly, you don't put a lot of credence into it. At least that's how I teach it. In the T-bond market, well, we now have a pattern of what? Higher high, lower low. I don't see a trend. I see a market stuck in the sideways action that is overbought already. Adios. I don't see anything there. 10-year note, similar. Overbought, first thing. How do I define overbought? If the slow stochastic has any number over 70, it's overbought. To get embedded, locking in a trend like it did here, both numbers have to be going over 80 for several days in a row or under 20 to embed. You're just overbought. I have no interest in markets like that. In the dollar index, we were looking, and I was saying, folks, I think that when you lose an embedded reading, prices often make a run to the 18-day average of closes. And if you take a look at this, you tried to get to it yesterday, and I know I came on and I said it's pretty darn close. I feel good that at least the market has done what I thought it was going to. In other words, getting back to normal when it makes those runs, at least my definition of normal. I'm looking at the 18, and today, yay, it rang the bell. So I think people that played the trend, a contra-trend move that when you lose that momentum, I think they cashed in today. The opposite happened in the eurocurrency. You got yesterday within 4 ticks. Today it hit it. I think people are out. You spent a lot of time getting down here, a lot of time in the dollar getting up there. Admittedly, the trend is down. In the swing line, the bias is down and momentum's down. There's nothing bullish. The question is, will the market try to find this as a support zone, or is it going to leak away and try to make a run for down here? In the Japanese yen, I asked 2 days ago, I brought up to you, why did the yen start jumping here? Because I didn't see anything financial to do it. I've become more and more convinced it's COVID-19. I can't prove it. But it looks to me, I keep looking at everything around the world, and all I'm seeing, China's lit up again with cases. I'm hoping they drop away. But when you start locking down 90,000 people plus, you cut your flights by, what is there now, 67% were cut back flying in and out of Beijing. They're now scrubbing down all the markets. Their problem there is they got to become out of a third world country and get these things more sanitary. I've never been the one, so I talk not with knowledge. I look at pictures. I watch videos. And when you have these open air markets like that and you keep getting diseases, it's not too hard to put 2 and 2 together. But who am I? In Bitcoin, sideways action. The trend is basically with lower highs, but higher lows. That is not something that I see very interesting. Sideways, and caught in these Bollinger Band sideways action. I'm just wondering if the market isn't going to use this as either a base or a top as prices narrow in and try to figure out what the next move is. Remember, prices did double from the beginning of the year in Bitcoin to where it's at now as the market started building in the May situation, halving, where the same computer doing the same thing only produces half the amount of a coin that it did before. Brent versus WTI. Brent is gaining on it once again. You can see that it began here and it's still doing so. So now this is the best move it's done since this move back under the $2 area. It's only a 55-cent difference, but it's still pointing to the upside. If we look at where the market is, 41.85. The last high was 41.66. So tonight, I have to revise and take these two arrows. Remember, the market's live right now, and when I prepared this, it wasn't doing that. And have them pointing with uptrends. You're back in an uptrend. Higher lows, higher high, over the 18-day average, momentum flattish and overbought. Now, I'm not interested in it, but it is pointing to the upside. In WTI, if we look at tonight's high of 39.27, it is not over this high. So you can see the difference between the two. That would be lower highs with a lower low. Even this was a lower low. Or was it? No. That's the lower low. And tonight we'll see what it does. But notice how price stayed over the 18-day average on a close. You never got the bias to the downside. And in this market, you're also very overbought. Rebob gasoline in an uptrend. Higher lows, higher highs. If the market wants to continue forward, then the objective is 130.23, in my opinion, at least the upper Bollinger Band. You break the uptrend if you get under right here, the 116.34 area, but this market's held very well. It is overbought, but it's in the first stage of getting both numbers over 80, and if they can lock in there, you can do what we call embedding, and maybe you go to another level. Summer season's on us. We're going to get summer solstice in a moment. People are going to start leaving on their driving trips. We have the 4th of July coming. People are going to travel in America because people aren't flying. I mean, I understand airlines are picking up more flyers, but believe me, compared to where they were is where they're up, not where they used to be. Natural gas. This market has that bearish embedded reading, which in my opinion means each and every rally up until that's lost gets sold, looking for a retracement to the lower Bollinger Band. You know, what I say here, I teach a lot more in my videos, and I put together a combo. I'm now wrapped up as one package at a discount price, my afternoon Spider ETF video with my morning futures. One plays on the other. So I've already done my afternoon Spider ETF video, gave traders the recommendations I'm seeing, very different than what you see here. A lot more markets. I've got 34 charts in it. I cover most of the major sectors. I'll take it up to 40. And then I balance it in the morning with my morning futures video. Why? Because an ETF on DIA or SPY is going to be looking at what's going on in the futures. And futures trade approximately from starting Sunday through Thursday, about 23 hours a day if you look at a 24-hour clock. I cover all these sectors, about 40 charts in here. You wrap the packages up and you have a game plan. That's all that I can tell you. 40 in futures, 34 in the ETF Spider. How do you get this? It's really simple. You go to our website at www.iraepstein.com. Under the word research at the top, there's the introduction. You can click on Spider ETFs or the futures. You'll see how the pricing goes. You can see how the combo's here. And from there, decide what package, if any, that you'd want. You can also click here if you're watching me, and that'll get you right to that page. In the meantime, I'm Ira Epstein. Thanks for watching, and I'll see you all.